This is Alpha, a unique perspective on the market. We follow the chart trends of the sentiment money model as we dive into today's pre-market observations on the U.S. stock market. Previous trading day. On Wednesday, August 27th, the U.S. stock market closed modestly higher in quiet trading. The S&P 500 rose 0.23%, its first record close in 2 weeks. The Dow Jones Industrial Average rose 0.34%, and the Nasdaq 100 rose 0.15%. The market rose broadly, with energy, XLE, up 1.12% and technology, XLK, up 0.54%. As risk aversion eased, U.S. Treasury prices fell, with the 10-year Treasury yield inching down to 4.238%. The gold ETF, GLD, rose 0.2%. The cryptocurrency market saw mixed gains and losses, with the Bitcoin ETF, IBIT, rising 0.87%, but the Ethereum ETF, ETHA, falling 0.75%. After a slight pullback on Tuesday, the U.S. dollar index also closed slightly lower on Wednesday. The biggest market focus of the day was undoubtedly chip giant NVDA, which released its earnings report after the market closed. The company's second quarter earnings per share and total revenue exceeded analyst expectations, and it also announced a $60 billion share repurchase plan. However, revenue from a key division, its data center business, which includes AI chips, fell slightly short of expectations. This news caused NVIDIA's stock price to fall by about 3% in after-hours trading. U.S. tariffs on India take effect. President Trump made good on his threat, doubling U.S. tariffs on Indian goods to 50% at midnight Eastern Time, with some exemptions for electronics and medical products. Separately, according to the Wall Street Journal, after demanding the resignation of Federal Reserve Governor Lisa Cook, President Trump told advisors that he hopes to announce a successor to the position as soon as possible. Next, let's take a look at some noteworthy stock news today. First news. NVIDIA, the king of AI, just released another bombshell financial report, but the market reaction was somewhat surprising. The data showed a near-perfect performance. The company's second quarter revenue reached a record $46.7 billion, a year-on-year increase of 56%, and net profit reached $26.4 billion. Revenue from its data center business, a core growth driver, reached $41.1 billion, also up 56%. Even more encouraging for the market was the company's third quarter revenue guidance of $54 billion, exceeding expectations once again. So, despite such a near-perfect report, why did NVIDIA's stock price fall 3 to 4% after hours? The answer may be 2 words: China. The company explicitly stated in its financial report that it did not sell any H20 chips to Chinese customers in the second quarter, and its impressive third quarter guidance also ruled out any shipments of H20 chips to China. This clearly demonstrates that the U.S. government's export controls are having a real impact on NVIDIA's business, temporarily shutting out a market opportunity the company itself estimated could be worth $50 billion. Although the company announced a $60 billion share buyback plan to boost confidence, investors are clearly more concerned about geopolitical risks and the sustainability of the AI investment boom. Coupled with the fact that CEO Jen Sun-Huang recently sold over $27 million of her own stock in mid-August, these factors have combined to lead the market to adopt a cautious approach despite this significant positive news. Second news. Let's discuss Serve Robotics. Serve, a food delivery robot that's becoming increasingly common on city streets, and the publicly listed company behind it. The company has been expanding rapidly recently. According to its latest earnings call summary, deliveries surged 80% quarter-over-quarter in the second quarter of 2025, far exceeding the company's own expectations. The number of robots active on the road daily also increased by 120% quarter-over-quarter. More importantly, the robots are becoming increasingly intelligent, with the need for human intervention decreasing by 25%, which directly impacts operational efficiency and costs. At the same time, the company is continuously expanding its reach with major clients, not only deepening its partnership with Uber Eats, but also securing new partners like Little Caesars. Of course, this rapid expansion and technological investment comes at a high price. Financial data shows that the company's operating profit margin plummeted to negative 4,031.12% in the second quarter, with a loss per share of 36 cents. This indicates that the company is still in a phase of burning cash for growth. However, the good news is that the company is not short of cash. It has $183 million in cash and marketable securities, which management estimates will be sufficient to sustain operations through 2026 and achieve its goal of deploying 2,000 robots by the end of the year. Investment bank analysts such as Cantor Fitzgerald have expressed confidence in its low capital expenditure operating model and robust unit economics. So, for Serve Robotics, the current story is clear. The operating figures are impressive, but the market is closely watching to see when these impressive numbers will translate into tangible profits. Third news. Finally, let's discuss Li Auto, a rising star in China's automotive industry. The company has recently run into some trouble, facing pressures from analyst downgrades, intensifying market competition, and the expiration of government subsidies. Investment banks, such as Macquarie, have highlighted execution risks and lowered their earnings forecasts. These pressures are evident in the financial data. Revenue growth has slowed to 13.45%. Earnings per share have plummeted 33.58%. And free cash flow growth has contracted sharply by 91.23%. However, amidst the pessimism, Li Auto does have some bright spots. First and foremost, Li Auto's insider ownership is a staggering 33.2% of the company's shares. Such a high insider ownership is generally seen as a key signal of management's strong confidence in the company's long-term future. Secondly, the company is actively responding to the impact of subsidy reductions by launching new products, including the Li Auto i8 SUV and Li Auto Megavan. Furthermore, despite the short-term challenges, some analysts still predict a long-term annualized earnings growth rate of 22.7% and believe its stock price still has 36% upside potential. Therefore, for investors, Li Auto currently presents a complex situation, with both short-term pain and long-term potential. Next, let's look at the FS model analysis results and see what specific trading actions should be taken in the U.S. stock market today. It should be noted that this model does not fully consider the impact of current market news and is merely an internally based analysis, not investment advice. First, let's model the top 200 stocks in the S&P 500. Today's trading activity is as follows. Stocks bought. None. Stocks sold. CME 270.12. Stocks held. ASO 4,205.41. MCK 683.51. BSX 105.87. WMB 57.49. KMI 26.83. LNG 241.6. WM 225.83. Orly 104.05. Over the past year, this strategy has outperformed the S&P 500 fund, SPY, by 16.34% in this group of stocks. Next, let's model the top 200 stocks in the S&P Midcap 400. Today's trading activity is as follows. Stocks bought. None. Stocks sold. None. Stocks held. TKO 185.65. UNM 69.54. Over the past year, this strategy has outperformed the S&P 500 SPY fund by 23.71% in this category. Finally, we modeled and analyzed the top 200 stocks in the S&P Small Cap 600 Index. Today's trading actions are as follows. Stocks bought. None. Stocks sold. None. Stocks held. RDN 34.95. CNR 72.8. EAT 156.14. Over the past year, this strategy has outperformed the S&P 500 SPY fund by 0.11% in this category. Okay, the above information is just a few perspectives on the market and does not represent the entire reality. Please consider all valuable information and consider your investment and trading strategies accordingly.